Assalamualaikum and salam sejahtera. Welcome to Madam Nik's class. Alright, so here is another video. Alright, to show you how to incorporate the adjustment into the template. Alright, okay, so I'm going to use the same question, past exam question, December 2019, FAR160. Okay, question number 4. Alright, so below we have additional information, okay, for the adjustment. Alright, so the first adjustment is for depreciation on property, plant and equipment, where you have to provide, okay, for building at 5% on cost, motor vehicle 10% on cost, office furniture 10% on carrying value. So for cost, okay, it means that 5% is on the cost of asset. Right, so for example here, depreciation building is equal to 5% times 12 million, which is the cost of building. So the depreciation equal to 600,000. Motor vehicle 10% on cost, so cost of motor vehicle is 6.62 million times 10%. So the depreciation is equal to 662,000. However, for office furniture, okay, they decide to provide 10% on carrying value. So carrying value meaning that cost minus the accumulated depreciation. Alright, so that is what we are going to do. Alright, so we are going to take the cost, which is 6.48 million. Alright, minus 1.68 million. Okay, the previous accumulated depreciation, which you can find here in the trial balance. Okay, 1.68. Alright, so it is equal to 4.8 million. Okay, times 10%. Therefore, the depreciation is 480,000. Okay, and the depreciation for motor vehicle is to be treated as selling and distribution expense, meaning that when we decide on the classification, we have to put, okay, depreciation on motor vehicle under distribution costs. Okay, alright. Next, alright, so we are going to provide also provisions, okay, for director's remuneration, okay, 650,000, meaning that, okay, there is an accrued director's remuneration, okay, you are going to provide for, meaning that previously this amount is not being stated in the account. Alright, it's not being recorded in the account yet. Okay, even if you look above, okay, in the trial balance, you may not find any director's remuneration. Okay, so we're going to create new account called director's remuneration. Okay, and then we are going to we are going to debit director's remuneration and credit accrued director's remuneration, meaning that another new account called accrued director's remuneration. Okay, for accrued expense. Okay, same amount, 650,000. Alright, and then to transfer 290,000 from retained profits to general reserve, meaning that we are going to take out this amount of money from retained profits account and then transfer to general reserve. Okay, we are going to minus from retained profits and then we are going to add in general reserve. Okay, so while we go through this adjustment, so why not, okay, we try to why not I show you how I transfer this information, okay, to the template, okay, starting from depreciation. Okay, so I'm going to put this side by side. Okay, I have actually prepared the answer, okay, but maybe we need to maybe I need to delete it first, okay, so that we can do it together, okay, on this part. Okay, alright, so similarly, when you transfer the items from trial balance, okay, we're going to do the same thing, okay, from the adjustment. Okay, alright, so here we have depreciation. So the first one is depreciation building. So depreciation building, view. Okay, so I want to make it larger. Alright, so for depreciation of the building, Okay, so depreciation building. So I transfer to the template. Okay, I'm using the same template as before, as the previous video. Okay, depreciation building. So I add, okay, after the retained profits, depreciation building 600,000, depreciation motor vehicle 662,000, depreciation office furniture 480,000. Okay, do you have to adjust for accumulated depreciation? No, you don't have to do that. Alright, because the accumulated depreciation that we have here is for the opening balance. Alright, and then this template will calculate, will add, okay, to the existing accumulated depreciation when the template compute the carrying amount for non-current asset. Okay, so you don't have to do that. You don't have to add to the accumulated depreciation. Okay, the template will do that for you. All right, except for other items, yes. Okay, we have to adjust. All right, so next is director's remuneration. Okay, so you create new account called director's remuneration 650,000 and another new account called accrued director's remuneration 650,000. Okay, transfer of 290,000 from retained profits. Okay, so this is from retained profits to general reserve. Okay, so I put it here as transfer from retained profits. Okay, meaning that I'm going to show this in the general reserve account. Okay, 290,000 transfer to general reserve. So this will appear in under retained profits. Okay, so to show that you take out the money and then you transfer to, sorry, not the money, you take out the profits, okay, and then you transfer to the general reserve, okay, of same amount, 290,000. Okay, next, number 3 is related to the declaration of final dividends. All right, so there are 2 final dividends declared by this company. The first one is for ordinary shares and the other one is for preference shares. Okay, so for ordinary shares, okay, when the company declare dividend, all right, there is no limit. Okay, there is no limit on the amount of dividend received by ordinary shareholders compared to preference shares. Okay, preference shares, the amount of dividend is limited. So when we calculate the final dividend for preference shares, we have to take into account if there is any interim dividend. Okay, we have to deduct, all right, and then the balance, okay, is your final dividend for preference shares. Okay, unlike ordinary shares. Okay, so ordinary shares, there is no limit. They can receive as much as possible. All right, so final dividend 5% of ordinary shares, meaning that 5% of the balance, okay, in the trial balance here, 14.7 million. Okay, so it is equal to 735,000. So I put it here, final dividend. Okay, 735,000. Final dividend preference shares. Okay, so final dividend preference shares. Okay, the total dividend of preference shares, 8% times the balance, 9.8 million, minus interim dividend. Okay, so the remaining amount of dividend, okay, to be paid to the preference shareholder is 404,000. Okay, so I add to this template. All right. And then part of the interest on loan was still unpaid. Okay, so what does it mean, part of interest on loan? So then we have to check. Okay, look at interest on loan. So for interest on loan, the total interest on loan is 7% times, okay, times the balance of bank loan, which is 2.7 million. Okay, that would be the total. All right, so how much have been paid, okay, previously for interest on loan? You refer to the trial balance. So you have here, okay, interest on loan previously, okay, they make a payment, all right, of 175,000. Okay, so when you calculate the interest on loan, okay, the unpaid interest on loan, okay, first we find the total interest on loan, 2.7 million times 7% minus, okay, whatever amount recorded in the trial balance, okay, which usually referring to the amount of interest on loan paid. All right, paid interest on loan, 175,000. So they still have a balance of 14,000. Okay, so this one. So I include it here. I include that as accrued interest on loan, 14,000. Alright, and then for accrued expense, okay, we have to adjust also the expense account. We have to add to the expense account. So what happened here? Okay, interest on loan. Alright. Okay, so what happened here? Okay, so this is the original amount recorded in the trial balance. Then I add with the accrued amount, 14,000, because that is the amount of expense incurred for the year. Okay, alright, so settle. Alright, investment income not yet received was 97,000. So far, they have recorded investment income of 130,500 ringgit, but okay, but there is still amount not yet received of 97,000. So we already earned this revenue, so we have to record this revenue. We are going to adjust our income on investment here. All right. Okay, sorry. All right, so here, let's look at here. Okay, so 130,500 ringgit plus 97,000, so equal to 227,500, and we are going to debit. Okay, debit investment income not yet received. Okay, meaning that we are going to create a new account called investment income not yet received of 97,000. Okay, next. And the last one is the current year tax was estimated at 710,000. Okay, so this is the estimated tax. This is the tax expense that you should include, okay, in your SOPL or statement of profit or loss as tax expense. So I'm going to replace, okay, tax paid. I think I have replaced that. Okay, so previously this is tax paid, so I replaced this, okay, as tax expense, and then I replace the amount. All right, so previously I have recorded here previously I record 497 tax paid, right? Sorry, previously it is recorded as 497. All right, and then okay, but the amount that should be recorded, the amount of tax expense incurred for the year is 710,000. So I have to add, okay, I have to add another 230,000 to make sure that it is equal to, okay, 710,000. All right, so this 213,000, meaning that, okay, it is still payable to the tax authority, so we are going to recognize that as tax payable 213,000. Okay, let's go back to dividend payable. Okay, dividend payable. For final dividend, usually the final dividend declared at the end of the year, where the payment of the dividend will be made in the following year. So what happened? When you declare, it will become your liability. When the business declared, it is their liability, okay, to make a payment to the shareholders. All right, so that amount, okay, that we have recognized here, then will be recognized as dividend payable also. Okay, all right, so I'm going to so let's classify together, okay, this item into its correct category. Okay, so the previous items that we have identified and we have classified, so leave it as it is. Okay, the classification does not change, okay, with the addition of the money, with the addition of the amount of accrued or prepaid, okay, with the deduction of prepaid. Okay, so let's leave it as it is. Okay, so focus on the rest. Okay, so this is depreciation building, so this is your expense. Okay, building is admin expense. Okay, is it a depreciation? Yes. Okay, you have to provide that detail so that your carrying amount, your asset carrying amount will be calculated correctly. Okay, all right. Okay, so next, motor vehicle. So as required by the question, this is to be classified as distribution costs. Okay, so expense, distribution. All right, is this a depreciation? Yes. Next, depreciation office furniture, expense, admin expense, depreciation. That's it. Okay, director's remuneration expense. This is admin expense. Accrued. Okay, so accrued directors remuneration. Okay, the company has a liability to pay to the directors their remuneration. So this is your liability. Current liability. Transfer from RP to general reserve. Okay, so this is an equity. This will affect general reserve. This is transfer from. And transfer to general reserve from. Okay, so from retained profits, transfer to general reserve. Okay, if you mix up between these two, you don't have to worry. If your account did not balance because of this, then you just change between these two. Okay, change also the sub-classification. Okay, final dividend. Okay, dividend is a distribution of your profit. So this will affect your equity. Okay, it will affect your retained earnings. Okay, so dividend. Okay, same classification for preference dividend. Accrued interest on loan, that would be your liability. You have the obligation, financial obligation to settle interest on loan to the bank. That's it. Investment income not yet received. You are supposed to receive the money, but you did not receive the money yet. Okay, so that is your asset. Current asset. Tax payable. Okay, you have the financial obligation to settle to tax authority. Current liability. Dividend payable, also current liability. That's it. Okay, so let's check whether we did this correctly or not. Okay, so working for expenses, so automatically it will update your admin expense, distribution cost, finance cost, other income, if any. Okay, not relevant to this question. And income from investment. Okay, so let's look at our statement of profit or loss. Okay, so everything. Okay, so everything here has been updated with the new information. Okay, including the tax expense, 710,000 compared to the previous discussion. Without adjustment. Alright, so this one is with adjustment. Okay, so statement of changes and equity. So you can see more items added here. Alright, so transfer from retained earnings to general reserve. Okay, so retained earnings, it will be deducted, and here it will be added. Okay, next. Okay, Bismillahirrahmanirrahim. Alright, so we have here total asset 40,333,000. Okay, which is equal to equity and liabilities. Alright, so you can see here, alright, how they prepare the current asset. Okay, prepare the equity and liability section. Alright, okay. Alright, so meaning that using this template, okay, for FAR160, you are able to prepare with or without adjustment. Alright, okay, so if you have any question, you may ask me in the comment section. Alright, or you may ask your lecturer. Okay, so how to use this template. Alright, so that's all from me. Thank you.